Hey traders, this is Christian from Tribeca Trade Group, and today is Monday, May 3rd. This is your end of day recap. Quickly, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. This video is for education purposes only. If by chance the video is blurry, it's because YouTube takes forever to render a high-def video. So close the application, reopen it, maybe a half hour or so, and they will finish rendering that quick video today, because we do have a TTG member webinar today where we're going over what the new value areas look like on the MarketWebs. We'll go over a little bit of that in today's video, but today's video will be pretty quick. So first day of the trading month, not usually what we have experienced so far this year, where we usually get a little bit more of a rally first day of the month as new money is being put to work, some of that new pension money. But today was a bit of a struggle, and for some reason we came in today and the market would gapped up about 0.5%. Again, one of those things where you sell the close. You buy the close, sell the open, which works more often than not, believe it or not, right? We know that over time, the majority of the money is made in the overnight market, not so much the other way around, right? If you can look at that performance, you can Google that. Overnight moves versus intraday moves, right? So buying the close, selling the open is much better than buying the open, selling the close over time. The performance is way dramatic. I don't have the exact numbers, but this is a 30-year relationship that we're talking about. So that kind of lived up to the historic move today, because if you look at the move of the averages from the percentage change from the open for all of the indices. Here, I'll zoom in here a little bit, because I think I'm zoomed out just a touch. But the S&P fell, 30 basis points from the open today, and really the Qs got hit, down almost 1% from the open. Finished down for the day about 0.5%. So again, you kind of take out that overnight move, and really it was kind of a nasty day for the Qs. Dow stocks, which was what I was thinking coming into this week, that they could have they could actually outperform. The chart looks just a bit better to me. That was something that we discussed in the trading room on Friday. I did have to leave early. I got my my second vaccine shot, so glad that's taken care of. Small caps, they finished up 0.5% for the day, but again, it's one of those things where this was more of a day, to try your best to sit on your hands. VIX fell for the day, down 2%. Gold and silver, silver was up 4%, so different move going on there. And in the metals, but sometimes I do think that we see this on the first of the month. Sometimes it's a little bit of buy the everything. That's how it kind of felt in the first hour of the day. But a lot of these things gave back their gains. The bonds were up earlier in the day too, and they gave those back too. So it just seems like so the takeaway from that, seeing that we didn't get that big first of the month move, is that there's just not a lot of appetite for stocks right now. And, we don't really know all the factors. I see a lot of people trying to figure this market out, talking about inflation, deflation. There's also, so that's a puzzle that I don't think anyone is really going to be able to 100% figure out. I think for now, you just kind of want to take away some observations. And also, another factor is we've got a lot of earnings this week. And it's a lot of the high growth names that report this week. So those, if you thought last week was bumpy with watching the FANG stocks report, wait until you see what like Palantir and Unity Software and PayPal. So I would say buckle up this week. It's going to be an interesting one. A lot of those names are pointing down, at this point. So, maybe earnings can change their tone a little bit. But for now, let's go over some of the day's movers and talk about where there was some strength in this market. One of my goals that for the rest of the year, and it's always one of my goals, is to follow price action, right? To really kind of go where the market takes me rather than where I want it to go. I think that you'll find that a lot of really good, a lot of traders that have been able to kind of adapt to that philosophy have had better year-to-date returns than those that are just, sticking to sticking to things that happened last year and being stubborn. This market is not a place to be stubborn right now. The more that you can change your views as to what the market is telling you versus being stubborn, the better your results are going to be. And I think that over time that's the situation. But specifically this year. Right, I still see, the high growth names are continuing to get hit hard, and really, kind of until I see some type of change, in terms of, Twitter kind of changing around a little bit and not still searching and for high growth areas of the market. I know that there's a couple services that compile like all the Twitter data and look at like what the most talked about tickers are on StockTwits or on Twitter, and there's still all the high growth names. So until that changes, I don't think we've been completely washed out of a very overcrowded area that we were basically last year. So that to me is what's a lot of what's going on in the market, and just that the market looks pretty tired. The one thing that I would say that's frustrating with that is we're not really seeing a major sell-off yet at this point. And I, for one, wouldn't mind seeing this market come in a little bit just to shake things up, because this little grind that we're getting every day, just is kind of death by a thousand cuts for a lot of names that are going sideways in this market. So we'll kind of see, and until that changes, the better that you can sit on your hands through the chop, trading smaller positions, trading less positions, in my opinion, is the better route. And, that's coming from someone who manages a trading room all day long. And that's difficult to tell people to do when you're trying to, come up with trade ideas and try to help people make money. But I really think that this is a place, for the most part, to while there are some themes, and I'm going to go over those in just a second, this market right now is more of a market to play a little bit more defense than offense. And then once this market, flips around a little bit, then we can kind of go back on offense a little bit. But it's one of the things that has to be done from time to time, right? And that is, I guess, the little bit of value right now that I am providing, is just to remind people that this is not a market to kind of stick your neck out right now until the conditions improve a little bit. And don't worry, I think that there will be times to get more aggressive, but right this second, I'm not feeling that particular way. All right, so let's go over. Let me just put this on pause 1 second. All right, and let's go over the index charts first, and then we'll talk about where I saw some relatives, where I'm seeing relative strength right now in this market. So S&P, the MarketWebs here. Let me just turn on a couple things here so that you can check out the volume profile, right? Because we're looking at volume at price. I'm also going to put the labels on, but here's some really well-defined levels for you, right, for the S&P chart. And we talked about this pre-market, but 4194, that would represent a continuation in the trend, right, in the uptrend, 4194. So who knows? Maybe we sit in value here for a little bit, which is not a horrible thing long term. Just means some chop in the short term. But 4194 is the level to watch on the daily chart. On the upside, we'll have things down here if we get closer to kind of worry about, but we can also see those levels on the 1 hour chart. Notice, we start again. I'm not really sure why this market wanted to gap up in the overnight market, but it did, and we're basically back to where we started, very close to where we finished the day on Friday as well. So we're in value now for the both on the daily chart as well as the 1 hour chart. So the level to watch there is 4189 upside and 4171 to the downside. So very, very sideways, especially when you kind of zoom out and you see over the last 2+ weeks now, we haven't gone anywhere in the S&P. right? Qs, we could look at that in terms of 1 hour. They look like they're a bit more vulnerable to the downside. They are below value now for the week. They got firmly rejected on the first hour of the day, right? You could see that candle. That is a rejection. You got to be very careful around the open right now. A lot of whipsaw moves, a lot of fake moves as well. I'm really trying to not trade that much. First 15 minutes, I try not to do anything. But really the first hour, considering the whipsaw, anything that I've been doing, and I talked about this in the macro video on Sunday, that if I put something on in the first hour, it's always right now a starter position. Okay, it's just too difficult. It's too hard. So there's the Qs on the daily chart. Some support coming at 334, also 20-day moving average. IWM is also going to look like a lot of chop. We closed right around the top of value for the new month. And remember, these value areas are new, right? We get a new value area for the month of May. Again, we'll be going over that more in detail in tonight's webinar. We're also below value for the week here. Okay, so the indices are kind of pointing down. S&P not so much. That's more sideways than anything else. But the Qs and IWM are pointing down on the short-term time frames. I mentioned I would talk about the Dow. If you look at this Dow chart, let's see if it changed at all. So again, no breakout here, but you could see it. To me, it looks a bit more constructive, right? Sideways, but trying to resolve higher. Just didn't close above, barely did not close higher. So let's talk about some of the areas of strength, right? Of course, the gold miners were up today. Whenever the gold is up, you'll see that, the gold miners. But what we saw earlier was the steel names. They closed a little bit off the highs, but if you look at this XME ETF, which is metals and mining, was up 5% for the day. SLX steel. Let's just see where this finished. Again, off the highs a little bit, but still up 2.2%. That's not bad. We've been talking about names like, I've been positioned in STLD, which I took a target at this one. Right, got a high of 57.08. I took a target at 56.75. Again, have to make sure that you're taking targets right now in this market. Shooting for swinging for home runs in this market, not going to work too well, in my opinion. Nucor, gave that funky move right around earnings, and since then it's been go time for Nucor. Various other names have been pretty strong. What's this? What's the symbol? I can't think of it. ATKR, is that what it is? Yeah, this one was up 6.7%, really strong. But there's a handful of other steel names. The chemical names also really strong, right? So Dow is close to a breakout. DuPont reports later in the week. But if you also look at a couple other names like, was it Eastman Chemicals breaking out? So all of these chemical names, there's a bunch of them. I think CC reported after the close today. Let's see what this one's doing. But OLN is another one too. Right? This is where we're seeing relative strength. What about the home builders? Home builders really strong as well. Right? So, if we look at the home builder ETF, we can go through a bunch of these tickers. MHK had a big day. GRBK, this is a name that I sold on Friday just because it reports this week out to new. Of course, the name that I sell, one of the names I sold on Friday, up 7% out to new highs. That happens sometimes, especially with these names, going into earnings. I'm convinced that people think ETH is Ethereum when it's really Ethan Allen. This name got hit on Friday, but came back pretty decently. But anyway, I still think people think that this is Ethereum, but when it's really Ethan Allen. And then, one name that I actually started at the end of the day was Lennar. Lennar is very close to breaking out and pushing higher. So I still like this group a lot. It's been showing relative strength for a while now, but I think the trend is intact, and I think Lennar is trying to push higher. So that's a new name for me. Other areas of strength in this market, the energy names, right? So the energy names came back with a vengeance today. We saw a nice repeat call buyer in Royal Dutch Shell. Nice little double bottom here and a level to trade off of here, which is bottom of value 37.92. But they came in a couple times today and purchased some May calls. So strong there. And if you look at this group, right, XLE. Everybody got maybe a little bit too bullish on this candle, and energy went higher on Thursday than kind of a little bit of a doji type candle, finished off the highs, fell on Friday, but look at it right back, right? So a bunch of names. There was a nice call buyer in this National Oil Well, as well as about 3 or 4 other names on Wednesday. So this name was up 6%. Lower price stock in this one, but so again, energy, the financials, I think they did okay today. Outperformed. That's up 0.5%. Right, so that's it. And then there's some pockets of strength in retail. Right, I've been long TJX. I got a target at 72. This looks very similar to Ross Stores. Right, we talked about some of the jeans names last week. Levi's, after a little bit of dip, right back out to new highs. We also talked about Ralph Lauren last week. That's out to new highs. So, Costco, I think, made new highs today, or close to new highs. So there are pockets of strength in this market, and that's our job, right? To basically find where they are, and we try to capitalize on that, right? So there's 2 other names I wanted to talk about just to see where these things closed for the day. Home Depot finished up 2%. Talk about a strong name. Nice little bull flag in here. Names out to new highs. Lowe's is close. Lowe's made the turn today, right? It was up 1.5%. But I wanted to do something with this one, but look at this top of value on the 1 hour. So that's 200, right? That was the barrier for the day. Could not power through top of value. So I'll wait for this one. I'll wait for that to happen. There's also a virgin point of control that it's got to get through. So it's got a little bit of work to do. So yeah, if you look at what I traded today, I tried a little bit of URI today. I thought that would also kind of fit with what we're seeing. It didn't really work today. I took it off at the end of the day. I didn't, again, if I'm doing something in the beginning of the day, they're always going to be starters. TJX got that starter. I added to an existing position. We're seeing a lot of strength too towards the end of last week in some of the casual diners. They didn't really follow through today, so that's still on the radar for tomorrow. Fedex, we talked about this over the weekend. Both Fedex and UPS, another area of strength, up to 305, new highs for Fedex. I thought that would follow UPS. I mean, talk about a stock right now. And look at the buying, right? Talk about, a lot under-owned. Right, and you could see the volume here, the accumulation volume as this thing breaks out. So, and that's why I think that FedEx can continue to go higher a little bit. All right, so that was an ad for me. I tried trading a little bit of Microsoft. I saw a little bit of strength in that group, and it managed to really come off. It managed to come off right after that. So I took that position off. There's no reason to be in, even though I don't view Microsoft as high growth. I don't care. I'm not going to sit in a trade that's not working. So I think you have to be really disciplined in here, and with your stop prices, and also with your position size, as well as quantity of positions. Very, very important with this market. Here's my other target in STLD, and I traded a little bit of JWN as well, going back to that retail theme. So material names both on the steel side and on the chemical side, energy names, some financial strength, and some retail, selective retail strength. Those are the areas of strength right now. A lot of value type stuff too, right? If we look at our screener down here, right, you could see that value outperformed by about 1.5%. today. And it's important to kind of watch where these areas of relative strength are. Look at what the ARK funds are doing, for example. On a day where the market was, where SPY was up, this ARK Innovation ETF is down 3.5%. I mean, I don't think I've ever seen a fund perform like this before. It underperforms when the market is going up, and it underperforms when the market is going down. Just a really out of favor group of stocks, and their mentality of what they're doing, in my opinion, buying stocks that are going down right now, going after relative weakness, not a good strategy, in my opinion. And if you look at the performance of this thing year to date, I still really not understanding why they get so much attention when they do a new buy, because look at the performance. They're down 3% year to date versus the S&P up 12%. Until these fund managers start outperforming, this fund really shouldn't be being talked about. I think it's doing a huge disservice to retail investors to keep talking about what they're buying and selling at the end of the day, considering that they're underperforming the S&P 15% year to date. All right, so just to put things in perspective, and if you're doing if you're sticking to things that are outperforming and have some momentum to them to the upside, you're doing a lot better than a fund that's mandated. And again, it's not all their fault. They're basically in a slice of the market as what the fund says that they're supposed to be in. So that's my opinion for the day. Have a great night, everybody, and hope to see members in the member webinar shortly today. Thanks, guys. Have a great night.